Good morning and welcome to Almus Market Morning. The global bond markets continue to be under pressure as yields move higher across countries and across tenors. US 10-year is pushing towards 2% and 2-year to new cycle high at 1.35 ahead of Thursday's closely watched CPI report from US. The headline CPI is expected at 7.3% versus 7% last month, while core is expected at 5.9 versus 5.5 last month. Before this crucial number, market will have to digest new issuance of 37 billion 10-year paper from the Treasury. Clearly, there seems to be no respite for bond traders. Stocks are doing the yo-yo with alternating influence from high yields and corporate earnings. Yesterday was a combination of positive influence from big names like Apple and Amazon. Apart from French President Macron's upbeat comments about his peace talks with Putin, which may pave the way for easing of some tensions in Eastern Europe. But with Fed expected to be on a long tightening course, it is unlikely that we see an uptrend in stocks resume anytime soon, notwithstanding the fact that US economy is doing very well. Dollar trades with a weakening bias, Euro and GBP exerting biggest pressure, even as monetary policy direction there converges with that of Fed. We are at key technical levels, and next push for the dollar needs more consolidation or a strong fundamental trigger. Another big monthly trade deficit announced yesterday by the US did not help the dollar stage a recovery. Only yen stands out with profound weakness as rising rates in other countries attracts more carry trades. Oil prices have eased after Macron comments and some optimism creeping into the US-Iran talks. Any deal there could unleash more than 1 million barrels per day of crude and push oil prices down, easing the broader inflation picture in the global scenario. USD INR analysts have drawn a lot of negatives from last week's annual budget, but rupee has so far held its own. As we head into the next big economic event, that is MPC tomorrow, our outlook for near term is a stable USD INR to move between 74.40 and 75.30. We do not expect a big influence either from the MPC decision tomorrow. Thank you. Have a nice day.
Thanks, JK. Today morning, what we are observing is Asian currencies are stronger, led by Thai baht and Korean won, and equities are likely to make some gains following the US markets. RBI MPC outcome tomorrow will be dealing with market worry on bond supplies, which is basically resulting into higher yields, along with the maintaining creditability on inflation fighting spirit of RBI. Sense is that they might realign reverse repo rate by 20-25 basis higher, but that is they have already discounted, and the way structure of a reverse repo had been created in last 3 months, the overnight rates have already clinged close to 380, 390. So that won't have a much of an impact on the overall markets. INR 10-year GSEC is closed at 6.81 against a previous close of 6.88%. On cancellation of a last auction, which was due on last Friday. Market would be looking at RBI's tone and the statement, how they see a government budget, which probably RBI will say that is comforting, is consolidating, and we will manage the overall borrowing. Thank you. Have a nice day.